Hello, everyone, and welcome back to another episode of WagMe TV. Episode 10 today, and I'm back with the fellas, the one and only Doc Mata, the NFT Lord himself, Alex Garcia, and the All-American, Evan Smith. Guys, this is our 10th episode. Feels like we just started yesterday, but cheers to double digits, fam.
Cheers, boys.
Double digits.
Yep.
Throw those hands up.
That went by fast.
It did.
It's been going fast, and for all the listeners, we're just getting started. So make sure to stick around, make sure to tune in. We appreciate all of you guys. And let's kick things off. Big news today with the Fed. Can talk a little bit about that and what that means for Bitcoin, just for our listeners. As expected, the Fed hiked 50 basis points. That was kind of priced into the market. The big takeaway today, and the reason why we saw a little bit of a risk-on shift, was because there was a portion of the market that was expecting a possible 75 basis point hike, either today or over the summer in the future, at either the June meeting, possibly later. Jerome Powell basically shut down those rumors, said that they weren't really looking to do the 75 basis point hike at any point. And so that kind of eased, hawkish fears on the Fed, and we saw a little bit of a pop. So I know some of you guys kind of tuned in to Jerome Powell's comments and stuff. What are your guys' kind of takeaways from today's meeting?
Yeah, I thought it was kind of surprisingly optimistic. Like you said, the chance of a 75 basis point hike was taken off the table. Essentially, the question that was asked by, I believe, the CNBC analyst was, what are the factors that are going to move you from a 50 basis point to a 75 basis point hike, or 50 basis point to a 25 basis point hike? Just seeing what would possibly fluctuate their strategy going forward. And Jerome Powell was basically saying that 75 is off the table. I think for the rates up to September, we were expecting 2.5% to 2.25%. And after he said that, I think there was probably one 75 point basis hike expected, but like you were saying, Sully. And so because of that, we saw the markets rip and the interest rates of future rates go lower. So yeah, I don't know. I think it was surprisingly optimistic for kind of what we were expecting.
Yep. And just want to share this really quickly. I know we've touched on DXY, the US dollar index, in the past, and how it's kind of inversely correlated with Bitcoin over time. And so today, right around 2:00, we saw that, dollar index get a little bit weaker, saw a little bit of a, pump in the crypto markets. And so now the real question is, our motto was bringing up a good point. Is okay, how long is this going to last, really? Right? Is this just going to be a, 1 week, only a few days, maybe rally slightly, and then we go back to, cautious? Or are we going to get a little bit of more of sustained run?
I think that's the greatest point. I mean, I think I mentioned this, I don't know, probably 3 weeks or so back, when we were talking about the Bitcoin conference and everything that was going on around that. But it's just the market's anticipating bad news, and when Jerome Powell comes out and gives some semi-decent news, or when it comes out as expected and everything is quote unquote priced in, right? That's when you see those things fire back up. And to take the 75 basis point off of the table, right? I mean, that's extremely good news to a lot of people in the market when it's based on risk on. So we saw it just go wild, crazy. Will it last 2-3 days? Will it last a week or two like the last one did? I don't know. I mean, I think there's still a lot of uncertainty. People are still very concerned. There's a lot of macro stuff going on. So I think the Fed's in a tough spot, as they always have been.
Yeah.
And Jerome did a good job of being, kind of level-headed and kind of making people feel a little bit better about the situation. He still has a focus on inflation. And we're still trying to combat that in whatever way possible. But it's kind of almost just inevitable. Like there's no really great way to kind of fix this. So it's not looking amazing in the medium term. The very short term could be all right for us here on the risk on side. And I think we all agree long term, Bitcoin's great. A lot of these risk on assets that are innovative, that are really moving the needle are going to be great in the long term. But that medium term is definitely very interesting. Like that 6 months, a year, maybe even 2 years down the road is kind of tough to envision right now, being much higher than we're at this point.
Yep. I know after the March meeting, we had all kind of anticipated a little bit of a rally, which we did see. I think the timing of when that topped out, we were like off by maybe a week or so. And a lot of that had to do with, not knowing that a ton of these Fed speakers were going to be talking like in between meetings and like things like that. So just for our listeners here, we can pull up just some dates to keep an eye on. Here is the U.S. economic calendar. Off the top of my head, things that we can take a look at. Initial jobless claims are usually pretty heavily watched. Non-farm payrolls also. Just kind of getting a barometer on where like employment is, where the labor market is, things like that. That's pretty much rounding off this week. Although here we go, Friday night, we also have a couple of Fed people speaking. So possibly, some information there. Next week, I think will be interesting because next week we've got the CPI print, right?
Yeah.
And so this is going to be a big one. So next Wednesday is a date to like kind of look out for. We got all the inflation prints, core CPI, and all kind of like the inflation type prints coming next Wednesday. And yeah, that kind of rounds out the next, I guess, week to 2 weeks. And so just a couple of dates to keep an eye out for everyone. Make sure you're watching out for that. Definitely could be, doesn't have to be, but could be market moving. So yeah, try to stay ahead of the curve as best we can.
I love that. And our very own Alex Garcia tweeted out, I think it was today, it was something about like everyone's listening to influencers about where the markets are going, where it's headed. When really all you have to do, it seems like, is listen to Jerome Powell, listen to the Fed, see what they're saying. What's the nature of it? Are we talking recession? Are we dovish? What's the dollar look like compared to some of these other fiats, compared to, cryptos, etc. It's just really funny. And I thought that was a really cool tweet. So shout out Alex Garcia.
Thanks, Tony. Yeah. Do we know what the expected CPI report is going to be? I think it was like 8.1 or something last time. And I don't know what they're expecting this time, actually.
Annualized, I don't know. Oh, year over year, previous 8.6. Yeah, you're right. They don't have the median forecast in here yet. Okay. I think maybe that'll come next week. So we can check back next week and see what the expectation is. But yeah, man, 8.6 is just
it's really bad.
So crazy. So crazy.
It's really bad.
And I think something that JP was saying like throughout the entire press conference was just like that these rate increases are blunt instruments. They're like not precise tools. So it's like they're kind of throwing it at the wall and seeing if it sticks. This is stuff where, as they go along, they're going to figure out what the best strategy is from there on out. They're kind of winging it. And so that's the thing, is like next month we could have a totally new tone to this. So while 75 basis points was taken off the table and that was optimistic for the markets, in a month we could be seeing a very different tune. So
that's a really good point.
Yeah, it's a balancing act. Can you imagine Jerome Powell comes out today and says 75 basis points?
Right.
What do you think the market would have done?
Collapse.
Absolutely. So they're like, they're on
zero.
They're on the thread. They're like, a little bit here, a little bit there. It's like, inflation's a great big deal. I don't know how much these, 50, 25 basis point hikes are going to do for that. But you can only do so much before you just completely break the system. Mm-hmm. So they definitely don't want that to happen.
when I think a
So I
lot of
feel
people
like,
are,
yeah.
oh, keep going.
Go ahead. No, go ahead. Go ahead.
No, I was gonna say I think a lot of people are also making the argument that we haven't, like, the West hasn't felt the full force of like the shortages that are going to come from Russia, Ukraine, and then also the Shanghai lockdown. So like there's the argument is like that's still another like season out because all the crops that have been like farmed for what we're eating now have already like come across to the West. So like there's this argument that like that's going to be felt in the coming quarters as opposed to like now. So that's something that could affect, you know, what JP ends up doing.
Yeah. What's interesting is like that almost causes like that's like inflation and price increases from the supply side, right? Like that's like supply shock that's gonna like impact that versus like what the Fed really controls is the demand side shock. So
Oh, that's true.
yeah, you know, like it's weird. It's like how much is rate hiking actually going to make a difference if just all the shit is just stuck overseas and like they can't even move the ships or something like that, right?
Right.
Just something to consider, and I'm sure they're taking all this into account. But it's you know it's important to know that you know even the Fed has limitations on what it can actually you know impact. So yeah, definitely some
I mean,
interesting stuff.
yeah, we saw a spike. I think we saw a spike at all risk on as we were talking about. But I mean, if we want to transition it into Bitcoin in general, I mean, I don't know if you guys check out the fear and greed index much, but I mean, even with the big pump, like we're still in a fear phase. I think it's the longest stretch in 2022 thus far that we've been in the fear phase on the fear and greed index. So, and people are still worried. There's still concern out there. So, I mean, how long will this little short-term bump last is really the question. So just be careful out there, folks.
And I think a tough part of it too is, you know, just having 1 month where we see inflation peak or even come down a little bit is not enough for, you know, the Federal Reserve to stop raising rates. It's something where they want to see sustained decrease or sustained plateauing of inflation. I mean, decrease if it's 8.6. But yeah, it's something where this is going to continue throughout the rest of this year and into next year. And so we're just going to have to keep our eyes open for any news. And that's why it's a great point to bring up that schedule. So you can see stuff where midweek, you know, somebody's talking and it's an indicator for the market. So there's a lot more than just the Fed meeting that goes on for this stuff.
100%. Sia, do you want to dive into some kind of critical levels on the TA that we can look out for in the coming future?
We can hop in here. So what I did, just like to give us a little bit of perspective, is I marked when the last meeting was. So this is March 15th to 16th. That's when the last meeting was. And then I copied that fractal from there and then drew it on to like where we're at today to see what that same game would have been. So if we were going to do the same exact thing from when Powell announced last meeting, we would hit like 45-ish K, like up here. But at the same time, like the pattern that I drew right here, this is a bearish flag. Like when you have a channel like this and it's going to the upside, like slowly. So when you have this going on, this is a bearish flag. And typically that's, I mean, it's not perfect, but more often than not, what you see is you'll get like rejected up here and come back and just fall through. Like that happens a lot on this type of trading pattern. So like what I could see happening is we do run up and maybe even go to like, you know, 45, 46. And like maybe we get some euphoria going, but then it might correct again, depending on what happens. But the ultimate, like if it broke 52, we'd be talking about like an actual reversal. So if it broke above this trend line and stood on top of this, it actually could reverse and like return bullish in terms of the direction. But it's really hard to say. But right now, the next key level to reclaim is like 41.5-ish. So that's this red line. So right now we're at like just under 40K. 40K is like a pretty big psychological level. It's not like a Fibonacci resistance or support, but people just think about 40K as like a big, you know, under above 40K is just a big kind of emotional level. But in terms of key levels, it's really 41.5 and like 46.8-ish right now.
Interesting. No, that's really cool how you drew the previous pattern onto, like, had it, or would it happen now and what that would look like.
Yeah.
Yeah. What is it? What are we holding? I mean, since like March, is there like a certain support level that we've held over the last like 3 to 4 months? Like the low point here, like a 37-ish or so.
So like the worst that we stabilized at was like 34, 35. We wicked down to like 33. But
Was that the invasion?
Yeah.
yeah, I think so. So really like it's been kind of like, if we're talking like support, it's really been like here. And then we actually fell through it recently like that.
Yep.
And then we kind of came back off that channel. But so like 30, 38, like, so the level that we're actually trying to fight through right now has kind of been like our support before. So like this is our current level right now. Like, you know, we've been kind of, this has been like a sketchy level for us already. So I think that's probably why we're not seeing it just like blast through. But really, it's hard to say what's going to happen. There's a lot of contradicting information on the chart. So it's really tough.
No doubt. And like, I mean, last time, let's say it took a week to 2 weeks to, you know, have that sort of rally. I mean, we could go to 45K in like 2 days. And like,
yeah, jumped.
That's the other thing. That's the other thing is like, it's tough to say like at the actual time frame, which is why it's useful to have levels though. Right. It's because like maybe we go to 45K in like a week to 2 weeks, but also maybe we just go there in 3 days. Right.
Yeah.
Like that's easily possible. Right.
I think if you're going to take anything away from it, even if you see us go to like between here, like 46, 48, like don't automatically FOMO and like think we're like going to the moon. Like that's still well within like this bullish flag pattern or bearish flag pattern. Like it could just bounce and come back down. So like a lot of people go, you know, once they see it kind of get up and go crazy, like, oh, it's already gone up 30, 40%. Like I don't want to miss it. You know, you don't want to do that. But
what is it? Don't buy into resistance. Is that what it is? Is that
like
the saying?
It's something like that. I don't know.
Unless you're our boy Do Kwon.
I mean, unless you have a 10-year outlook and you really don't care, which I feel like is a lot of our opinions on Bitcoin anyways. But
last time we had a 22% run from the Fed meeting. So, you know, we've done like 4.5% so far. So like if it played out exactly, we have another, 15% to go. But we'll see.
And so, if you don't mind pulling that back up again.
Oh yeah, sorry.
What makes that, and I guess this is like just general like TA knowledge that I lack, but what do you see here that makes it bearish, and what's something that you could see that would turn it to bullish or like just less bearish? Like what's a possible signal that you could see that would turn your thought process, I guess?
Yeah, so basically like with a lot of these chart patterns, to reverse them, so to like invalidate them, that's kind of what it's like the term for it. So like if you establish there's a bearish flag pattern, like this is a pretty quintessential bearish flag, like the flag, like this is the flag of it, and then the flagpole is this right here. So it's just like, it's kind of a bad like description of what it looks like, but that's like the general pattern. And a lot of the times it's bearish, but not all the time. But what would invalidate it is if we got above this trend line up here, and specifically this level. So like if we're able to stand on top of here, and then we're going to go one more time for like 51, like you can see the trend line like is almost lined up exactly with this next Fibonacci level. So if you were to break 51 and go on top of that trend line, it would actually invalidate the bearish flag, and then you're going to have to reanalyze the chart. But this is on the daily candle too. So like some people if you go and like look at like the weekly candle, it's almost a whole different type of analysis. This isn't really too much on the weekly candle. Like it wouldn't be enough to say this is a bearish flag. Like not enough really is played out here to call it that.
Interesting.
So like that's the daily candle, and I look at the daily candle a lot, but like someone like Ben Cohen, who Mata listens to a lot, like he almost always looks at the weekly candles because he's very like long term, And a lot of the times you can
Right.
tell certain movements of Bitcoin with the weekly candle, but charting's tough because it's a lot based on the perspective and the timeline that you're looking at.
Right, right. And it is interesting though, just how you hit that lower level right as we come into that Fed meeting on May 4th. So yeah, I don't know.
It's crazy.
Yeah. I mean, I guess that's how it works, but
well, I think Soham brought up a good point. I think it was last time we were talking, like, people always want to talk about retail investors, but what really moves the market is people with millions of dollars, hundreds of millions of dollars, big banks with billions of dollars. Like, and all these people, like the smart money is timing their investments around things like the Fed meeting, around things like the CPI, around things like, just general macro movements, and they have their ear to the ground. So a lot of the times, like, if you just try to generally stay where they're at, maybe you can be more successful, but
yeah,
it's interesting.
So what you're saying is
Cool.
we got to shoot above 50 and then we got to hold it. And then you can call us in a bull market.
Yeah, 51.5 to be specific. Yeah,
Good luck. Have fun.
Yeah, that seems so like out of reach right now, but who knows?
Yeah.
We could wake up tomorrow, I'll be at 44. Who knows? I mean, I don't know. It's crazy.
Hey, this is the crypto market.
Honestly, I miss those days where it just rip like 10% in one day.
You're like, oh my gosh, my net worth is up 10% today. Awesome.
Well, thanks for running us through that, Sia. That's like super helpful perspective.
Yeah.
It's fun coupling that with the broader macro talk that we, usually do. Did you guys have some info on Solana and, outages that happened, some interesting news that came up this week?
Yeah, I think we have a bit just to share this brief article, right? So those that are unaware, Solana did have a 7-hour outage about 4 days ago. It was due to spam bots actually hitting the platform really, really hard at 4 million TPS, really, to get NFTs. As you know, Solana just kind of was announced on OpenSea. NFTs are starting to become a lot more popular on the network in general. So once again, Solana goes down, kind of in a way. It's like they go down after something like really great. They do something really great. They have all of this traffic, and then it goes down. And I mean, that's understandably extremely concerning, right? Not just for those who hold Solana, but just for the crypto market in general, right? Seeing how all of this can happen. That said, a little bit interesting, not something that you love to hear, and doing a little bit of digging into it, and something that we're all going to keep on top of a lot more here moving forward. But their dev team did say that they're confident they have a permanent fix for this, not just kind of a band-aid piece, an actual permanent fix for it. So that's always something good to hear. But very, very interesting. It's holding up fairly well relative to some of the other L1s even after the outage, which is pretty significant, I would say. But we'll have to keep an eye on it and how that all goes. It's not their first outage. It's not the first time this has happened, so we definitely gotta keep an eye on it. Anything that you'd add to that, Sia?
No, I mean, I think you covered most of it there. Like I think the other question, you might know more about it than I do, and Evan might be able to jump in here too. But I think I read somewhere like this is like their 5th outage of the year, but not like including like partial outages too.
Right.
So my like obviously still it's technically in beta, and like most cryptos don't really work anyway, so it's not like a big issue now. But my question, I guess, and why I mentioned Evan too, is because this comes into like the cloud side of things. Like if a business or a larger company is going to use something like a Solana, Ethereum, AVAX, like are they going to look at it in the same way where it's like, okay, well, we need 99.9% uptime, or like, do we need, can we sacrifice some uptime for the speed? Like, I think that's kind of where it gets interesting, because Solana is like, 95% of the time, more than that, maybe it's like, one of the best L1s to use, like for NFTs, just general transactions.
Yep.
But I guess my question would be, and this is just like an open-ended question, but what are like institutions going to want to, prioritize for like something like an L1 to adopt? But That's kind of where
Yeah.
I'm thinking.
Well, I think like a kind of telling example of that is, you know, a lot of people are trading cryptos and borrowing off their Solana. And, you know, whenever they want to pull profits, obviously the network has to be up to be able to take profits, or you know, it really doesn't matter what it is. You got to have a network there to be able to liquidate or get into a position. And there's been nightmares of like past Solana outages where traders have been up big and not been able to get out of their positions, and then been either liquidated or, you know, just had huge losses. And so, you know, that's one thing for traders, but it's the exact same problem for a lot of companies that would want to run on this, because they would lose out on any business, any transactions that they could possibly have. And I know I've been to restaurants when their credit card machine isn't working, and it's like, well, I don't have cash. I don't know what to do here. It's that same, you know, situation, but just in crypto. And so they're losing business, you know, their customers would be unhappy. And you're exactly right. Like this is, if this happens too frequently, it's not a platform that companies can build on top of.
100%, right? It kind of goes back to that blockchain trilemma we were talking about, right? Security, speed, decentralization. Who's going to figure out how you can have it all, right? So I think we all know, right? Like Ethereum, security, really great.
Yep.
Solana, speed, really great, right? And so you have these scenarios where it's like, which should be interesting in the future, right? From an interoperability perspective, it's like, will there be one chain to rule them all, or will there be certain chains for different use cases, right? I mean, it's just tough to see, because it has such a bright future. It's got so much around it, and it just keeps having these outage issues. And that said, right, like to the blockchain trilemma point, like Sol really just happened to be the second network that was negatively affected by the increase in transaction volumes from NFTs, right? For one example, Ethereum's gas fees from the other side piece that we'll go into in a second, I mean, they were massive, right? Which is one area that Solana is trying to go in and help fix. So it's interesting, right? Like same kind of sort of issue in a way, right? Too much traffic on the chain either caused increased gas fees, which is pretty much unusable at that point as well, or just the outage in Solana, right? So unusable either way. So they got to find a way to figure it out. But I think you nailed it on the head, right? Too many, like a couple times, yeah, like we're in beta. You can only say that so many times where it's like, all right, but like you can't go down. Like you just simply can't go down. But no one really says that for like an Ethereum. Like your gas fees can't go up. Like it's not really something that's said. So it's it's part of that trilemma, I feel like, where it's like, where's the give and take? At what point does a gas fee basically being so high essentially equate to being an outage, right?
Exactly.
So an interesting way to look at it.
And I think like bringing it back to our discussion last week, like different networks have different pros and different cons. You know, something like a Solana could work very well when it comes to, you know, what I think of is like battle royale gaming, where not everything needs to render on time perfectly. You know, not all data has to arrive at the same time, but as long as you're close to perfect, that's enough. And so you're able to get these networks that maybe don't have that security that are needed in DeFi, which is what Ethereum is great for. But for other use cases, and like we talked about with Polygon and a couple other L2s, that's good enough. And so it's really just like, what do you want to use Solana for? Because there are good use cases out there. But when we look at the money in crypto and we look at DeFi, where a lot of it's concentrated, it's not going to be the best use case for it.
I think Armada, you kind of like took the words out of my mouth in terms of it's kind of interesting that in the same week on two different networks, you had two pretty big events that kind of stemmed from similar like causes, resulting in different failures, but nonetheless huge failures, right?
Yeah.
It
I mean,
illustrates,
huge
it illustrates, you know, just how early we are in this entire thing, right? Because, you know, crypto bears will say, this is the whole reason why this shit doesn't make any sense, right? This is the whole reason why we should just be bearish, because like, there's no way that this can like work like correctly and, you know, have the trust that's needed to actually function and actually get users to use it, right? Because when things like this happen, like nobody actually wants, like nobody besides the people who are actually in crypto want to use it, right? It makes for an awful user experience. And so, yeah, we're just gonna have to wait and see. And you know, I think it's always been a bad bet to bet against humans and like ingenuity. And that's basically, you know, if you're bearish on the crypto space, that's what you're betting against. And so it will take time to figure out, but it is just a, you know, a friendly reminder that we are very early in the space, and it's there are kinks that are going to have to be worked through. Otherwise, this is absolutely unacceptable, right? Like Evan was saying, like there's just no way like a business or something with like, you know, basically a traditional finance business or like a traditional business with no blockchain, you know, experience or whatever would look at this and be like, okay, now I'm comfortable putting all my data.
There's just no way
on this, right? Like there's just no way. So definitely like a lot of hurdles to walk through or run through, jump through, whatever you want to call it. But yeah, you took the words right out of my mouth. It is interesting that that happened kind of in the same week, and yeah, we get to talk about it here today.
Well, and in response to the exactly, and in response to the other side mint, like the Bored Ape Yacht Club Metaverse mint, Vitalik came out and said, like, in order for Ethereum to be scalable long term, transaction fees need to be like average under 5 cents per transaction. Like that was kind of his marker. And he's got a long way to go for that. But that's kind of like his benchmark in terms of like, he doesn't see Ethereum becoming like a PayPal until it's like, you know, 5 to 10, ideally under 5 cents a transaction. So that's interesting because like, he's obviously not just throwing out random numbers. Like he's probably talking to, you know, companies about that, you know, being the founder of Ethereum, he's probably in constant communication with, you know, companies like PayPal, you know, other people who are, you know, who have knowledge of the space. But I don't know why he picked 5 cents, but that seems to be kind of his target for the future of Ethereum.
Well, and there's 2 ways to kind of get to that 5 cents. I'm sure there's more than 2 ways, but the one would be, you know, making those transactions cost less by doing proof of stake or switching up how the platform is architected, but also, you know, just less transactions, you know, doing more mass transactions like Polygon does. Like that's bringing down gas a significant amount. And so, yeah, I'd be interested to see. I'm sure he talked with like a consultancy or some Web3, you know, yeah, consultancy brand. So I'd love to see if there was a report out for that. But that's a great call.
Yeah, Vitalik's over there going, well, at least I didn't go down. At least Ethereum didn't go down. You just had to pay a pretty penny to use it.
Yeah,
right.
Exactly.
So, two sides of the, you know, there's double-edged sword there. So
Yeah.
On that note, should we pop over to the other side?
Yeah.
Really to the other side.
Break on through. Ev, do you want to kick it off or you want me to kick it off?
Yeah, I can give a little intro and then I'll run through some of the stuff that I saw just around on Twitter around the launch. So I think like we talked about in our last episode, the other side was the land mint for the Bored Ape Yacht Club, where each Bored Ape Yacht Club owner was given a whitelist, and then also each land parcel was going to be bought in Ape. And so we saw a huge run up to the launch of Ape, going from $12 a coin to, you know, around 20 to 25, which was a huge run up. And then, you know, they ran into some complications in the launch. It was a huge gas war. And so I was pretty new to gas wars. I don't think any of the NFT collections that we've bought into have required, you know, really fighting that hard with gas. to be able to mint. And so I wanted to look into it. And the founder of NFT Worlds, ArcDev, who I think we've covered in past episodes, had a great thread on it. So I kind of just wanted to go through a couple different pieces of, or some notes that he had. So essentially, and if I could bring up the screenshot. So there's a certain amount of gas that's allowed for each block of Ethereum in the Ethereum network. And when you're thinking of blocks, there's 12 to 14 seconds, there's a new block basically minted in the Ethereum network. So this is how data is being stored. This is when you're talking about buying and selling cryptos or NFTs. These are what your transactions are being basically loaded into. You're trying to fit as many transactions into a block on the Ethereum network as possible. So he had a great thread, and he was basically comparing it to a bus, where the people that are getting loaded onto the bus are of different volumes. And essentially, you want to be able to pack as many people on that bus as you can. And the way the network determines who's able to get on that bus is basically saying, hey, if you're this volume, you're going to pay a certain rate per like cubic foot. So what's basically happening is with each transaction in the Ethereum network, you have to pay a certain amount, or you're basically in a free market where you're trying to pay the most so that your transaction goes through and you're able to get on the bus in that sense. And so when you look at the actual land mints that happened for the Otherside mint that we're talking about, there was basically 350,000 units of gas used on each mint. And each mint was 2 parcels of land. And so the gas limit on a block in Ethereum is 300 million. And so what you were looking at for each block within Ethereum, so every 12 to 14 seconds, you were seeing 80 to 85 transactions go through. And as he goes through this thread, he talks about how different ways of structuring the contract could have alleviated this pressure and had 80% more blocks per or transactions per block by just changing like different basically pieces of code. So essentially what happened with the gas war is you're seeing this astronomical number where usually there's 500 transactions per Ethereum block. In this mint, there was 80 transactions per Ethereum block. So, less than 20% of what usually happens. And so basically people were saying, hey, I will pay this ridiculous amount so that the network allows my transaction to go through. And really what it is just people outbidding themselves on the network to be able to make sure that their transaction goes through. And so this saw, prices skyrocket. It wasn't even like the price, it was the gas plus the price. But what also happened was there was a lot of money lost in failed transactions. You still have to pay gas if you submit your transaction to the network. And so that was the biggest problem is a lot of these people got outbid during this gas war, lost a lot of ETH during the process of trying to bid for that highest gas price to allow their transaction to go through in this limited space. And so I'll let Garcia go through just kind of what he saw with some of the people getting outbid. Was I sharing my screen?
No.
No.
Oh, no.
Are you supposed to be?
I was supposed to be.
Give us a sneak peek. I'm curious. Give us a sneak peek. I want to see it.
Don't worry, we can link it.
And we'll
Yeah, we
link
can
it.
link it.
We'll link it. But this was I was throwing a lot of numbers out there, but this line right here, where we're looking at 350,000 units of gas per transaction. That's the one that's determining like that there's only 80 transaction per 12 seconds. So yeah, you usually think of Ethereum having 12 transactions per second. With this gas limit, it gets down to 4, maybe 5. And so you could see network traffic, being less than half of what it usually is. So we'll definitely link this and you guys can go through the math yourselves, but sorry for not sharing my screen there.
You're good. No, I think that was a really good explanation. Sia, did you have
Really good.
something?
Yeah, so like where a lot of the backlash came from was that a lot of people, since like there were 100,000 parcels in the first like iteration of the mint, there's going to be 200,000 in total. It was an opportunity, especially at 2 ETH, for like, smaller people to get involved in like the Bored Ape Yacht Club community. Kind of, you get access to a piece of their Discord, like you just get to own a piece of Yuga Labs basically. And so a lot of people were pumped for that. So like they bought, their 2 ETH worth of ape. They bought it at whatever it was, 20 something bucks right before the mint. And then they turn around and don't realize they need another 2 ETH to compete for the gas. So like a lot of people were talking about retail not retail, but I guess, retail, who are not as experienced, that maybe had like their first, exposure to NFTs with this happening. And so not only including the gas fees, like a lot of people are saying, they lost, many people lost like close to $10,000, including the loss in ape when you sell the ape for a loss, but then also having the transaction like costs like 2 ETH to mint. But then you also had like the other side, I think, is down, and I just had the OpenSea thing, but other side is down pretty heavy right now. And so like there's some people who just straight up also didn't get to mint it because of how much the gas fees were. So they just took the loss on ape and then also ate the gas fee. So that's, $6,000 plus however much else on the loss on ape. So like you have normal people who are just trying to get involved in this, losing thousands of dollars. And so like the brand got totally like hammered. Like people just started selling their apes. I think Bored Ape Yacht Club went from like 175 ETH floor to 100 ETH in like a day, because people just
Was
like
that
liquidated it.
175 ETH floor?
It was like 160 something, I think 160 to 170, some up there.
Oh my God.
Ridiculous. It was like 500K for one of them was like where it kind of topped out. But
my goodness.
Yeah. So like there's a lot of people that were posting like, they know a lot of people down 10K plus. Like there's people that are just like, yeah, because how this works, like when you basically, like to use ArcDev's analogy and Ev's analogy, when you don't pay enough gas, you essentially get the bus door closed on you and they take your money, is essentially what the analogy is like. So like if you're at the end of the block and your transaction doesn't go through, you didn't speed it up, you didn't pay more gas to get the mint, you're just out that ETH. So like luckily Yuga Labs is big enough where they could refund people, but like normally a project, you'd just be out. Like you'd just be out that ETH, like you're just gone. And it's just burnt. So like there's a lot of people just talking about, they lost 1,600, they lost 2 ETH, like they minted their 2 pieces, but they paid an ETH, almost 2 ETH just to mint it. So like, it's definitely like one of the only mints that Yuga Labs has had where it's down from the amount it took to invest in a piece of the land. Because normally like a lot of their projects obviously go like sky high almost immediately. But just definitely some sour taste in people's mouths from the brand for sure.
Yeah, I wonder if those people wish they were on Solana and it had just gone through an outage instead of having to lose their
right.
It's kind of funny how it rolls back to that, but no, this is it's not like funny, right? It's not like that sucks. It's horrible. No one wants that to happen.
Just so much wasted money.
Yeah, 177 million in gas fees are just burnt and gone forever. So on average 6,000 per person. So like there's, if that's the average, you can think about it, 25% of the pool was above that, 25% below. So it's just like, there's some people out there spending, 10, 12, 13K on gas just to mint these things. But like,
or you can just
when you're
buy
in the heat
it right
of the
now
moment,
for 3.5 ETH, right? Obviously
now you can,
hindsight is 2020, but
yeah, these were sitting at like maybe 9 ETH at their high or something.
Oh,
but
yeah, it wouldn't be 3.5 ETH if they didn't have this big problem. I think is the idea. Right?
Yes, yeah, I think so. And the other thing is like people were kind of going with the sentiment of like, oh, it's the rich guy winning again kind of thing, because they still made 317 million in 24 hours. So it's like they still pulled in a ton, and that doesn't include the percentage that they get on this. So it's already traded 217,000 Ethereum, and they get a cut of
Right.
that.
They
So
get
everyone's like
5%, something like that.
yeah, so like they've made 30-40 million dollars on that too. So you're talking 350 million in 5 days. So it's like, people are kind of like, all right, man, like you guys got your bread now. How are you gonna fix this kind of thing? So it's definitely been a bad shot.
And
Yeah,
they
and
did
Evan,
refund
Evan
it
said
though.
the
To be
Yuga
clear,
Labs. Yeah.
True.
Did they refund it? All of it? Is that how that worked?
I saw that on Blockworks.
Yeah, I think Soam was bringing that up. They did refund all the people that lost to failed transactions. So anyone that tried to speed up their transaction and they didn't get the mint and they just lost the ETH, they refunded those people. But if that's your first experience in NFTs, like you're probably quaking. Like you're like, I'm done. Like I'm out of here.
Yeah.
Yeah.
I
At least
will
they did
say-
something for it.
I will say that Vitalik had an interesting tweet where he talked about how it wasn't like the actual contract's fault, but it was more around that was what people were willing to pay to mint it. It was more of a market value rather than like no matter how they situated their contract, like whether they made it like, I mean, they weren't going to make it gasless, but like, they were going to make it so that they decreased by 80% how much gas you paid. He was saying that, at the end of the day, like people want to get in here and you got to create like a market value when people are competing for what that product is, that's other deed. And so I thought that was interesting where maybe it doesn't come back to, I mean, it's bad press for Yuga Labs, you're right. But it could also be just a case where it's an open market and that's what people are willing to pay.
That's definitely a good point, because like there is the argument made that like, the base price was probably somewhere between 4 and 6K, but people were worried that it was going to mint out too quickly, like especially the people that had whitelist but don't have a Bored Ape or don't have a Mutant Ape, because they're they have to claim it within that 24-hour window. So I bet you like some of them probably could have just waited out the transaction, it would have gone through, but they didn't want to risk it. So to your point, they probably were speeding it up, spending more money, and then the person who comes in after them has to spend more than them to get their transaction like to go through. So it's like, yeah, just exponentially gets worse.
So do you
Into a cycle.
guys think this is a buy the dip situation?
For the other deed,
do you think the other deed for the other side at 3.5 ETH is a bargain?
I thought you were talking about Bored Apes for 1 second. I was like, damn, so you coming to some cash? What are you doing on the side?
No, are you kidding me? No way. Well, Bored Ape floor price I just checked is 116, and
About Mutant Ape.
the other
Mutant Ape.
side is
120s.
3.5.
Yeah, my concern with other side is that I don't think they're going to have a functioning game for a while, and it's going to be a very, very high supply project. So I think it's going to be 200,000 parcels in the end, like once it's all said and done.
Oh yeah, there are a lot of items, that's for sure.
Yeah, so like
97,000.
That'd be my main
Expected
concern.
200,000, right? So is that saying that some of them are just delisted, or not all of them have been minted?
Yeah, not all of them have been minted yet. Like, so some of the Bored Ape or the Bored Apes can mint theirs. Like, they didn't have a 24-hour like claim period, I don't think.
Gotcha. Yeah.
So I think some of them, and then I think there's another phase where more land's just going to be randomly airdropped to people that hold like X amount of pieces of land. So it's really tough, because you're going to be fighting a heavy listing volume anytime you want to resell it. That would be my only kind of red flag. But apparently they're building it on top of a game engine, so it's not going to take as long as building out their own game, but it's still going to take some time.
Interesting. I mean, God knows they have the funding now to do it.
Yeah, if the
Over 300
450 million
just
at
from
4
this.
billion valuation wasn't enough 2 months ago, now they have another 350. It's crazy. It's literally just like two guys in their 20s and 30s too that started it. Now they're just like, they started it literally a year ago. It's crazy.
Yeah, that's crazy. And weren't they supposed to have like unique NFTs that would come from rare lands, right? Like,
Yeah, so like the coda is the big thing. It's supposed to have some so if you go to like the coda ID and stuff, like it has, so it's like that little alien that's on the land. And so like that's like one of the rarest things to have on the piece of land. So any piece of land with a coda on it. So there's also horror stories of people that don't own Bored Apes and they just essentially aped into the other side mint, hoping to pull a coda. And like some of them are like, I'm sitting on 50 other side deeds down, 50% and got no codas. It's just like, it's crazy.
jeez.
Some people just have wild money.
So that's the guy right there. That's what we're all
Yeah,
after.
that's what makes
That's
yours
what we're
worth.
all after.
Yeah, that's worth 20 grand above whatever the floor is. Because
It still blows my mind to this day.
I think this one's what, 70K for this one?
Yeah, cash out your 401k, boys.
Yeah.
Yeah,
We're going all in.
80K. Look at that.
Yeah, it's wild.
Not too bad.
Yeah, so this, if anyone had a
Not too
question whether
bad.
or not Bored Apes were the best investment of all time, they got these for, essentially free,
Yeah.
which is wild. But
Yep. And I think as we keep refreshing, we'll probably see. Oh, it didn't go up, but I know. I know when Garcia was showing, it was 217.
Nothing like a live demo, am I right?
live demo don't load.
Awesome.
Yeah, that kind of covers it for other side. It's, I think they're just gonna have to dig themselves out of a brand hole. But besides that, they have their money and people have their other side deeds. So we'll see what happens there.
At the same time, they also have one of the strongest brands probably in crypto. Like people who don't
True.
even know crypto know Bored Ape Yacht Club. So I think this will just be a small ding along the way, as long as they can just keep it going.
Yeah, I think Neymar like posted some like photo of him rolling to practice with his Bored Ape shit on. Like he has a couple. There's just people just buy it just to buy it. I don't know. It's like it's become like the new Lamborghini, I guess, at this point. Because it costs more than a Lamborghini, but at the same time, like I think it's more of a, like you're seeing this kind of like community flex of like what it means to the culture as opposed to like a car. Like it's just an interesting segue into like what people are going to consider as like luxury items in the future, like, what people use to kind of flaunt, but
Yeah.
Yeah.
Interesting.
Absolutely. And that's another question of like, it seems like Bored Ape Yacht Club, it's obviously very cool. But it's like, what utility does it have? Outside of just like getting more rich and more rich from whether it's ApeCoin drops or, free mints for the other side. So I feel like with the other side, it's going to be really their kind of biggest test of like, can they build real utility? Or was this just kind of like a grab for cash? So we'll just see how that like plays out down the road.
it's a really good question.
All right, boys. I think that does it for this week. Episode 10 in the books. Still can't believe it. We're in double digits, but to our viewers, thank you so much. As always, if you found any of this useful or entertaining, definitely hit the like, subscribe button down below. Leave us a comment. We'll be back next week, same time, same place. You know the drill. All right, boys. Well, 10 episodes in the books and many, many more to go. Cheers to that.
Yes.
Peace.
Wag me.
Flag me.